Hello and welcome, Peter here. It is Thursday the 16th of December. Yesterday we had the big FOMC meeting we were waiting for. Was it worth it? Well, it looks like it was. We've had a big tick up in the markets. Yesterday we were down on most of the markets, travelling through the day as shown by this sort of wick here, and then we had a strong push up after the Fed announcement. So what did the announcement say? How did it make the markets happy? I think in sort of a couple of ways. One, people felt that the Fed were talking more realistically maybe about the markets, and that inflation was actually a thing, and there are 3 proposed interest rate hikes for next year, which should help deal with that, and that the taper is being tapered more quickly. So bottom line, markets happy. What did we see? Well, here we are on the NQ, our starting point as usual, and you can see we pushed up right into that resistance zone. We got about halfway in there, couldn't get any further, but crucially we're now above the median line. Now this median line turned green yesterday. This is green but still flat. This is flat, and this is red down here. What does that tell us? It tells us the median line will now be acting as support. We're obviously going to be starting at this point today. Have we got any real compelling sign pushing us up or down? Well, no. Flat, flat, flat at the moment. We push to the top. We've got a super major coming in there. Got quite a long gap there. Seeing slightly tailing off major and super majors down here. These ones worth keeping an eye on as we move forward. In terms of levels for the day, we were clearly broken through this one. I would say the furthest one should now be the crib laid down yesterday. When you have a reversing candle and a big one at that, it's a strong crib marker. But where to put this one? This one was at that crib level there. I think that needs to be further down. It's aligned to a crib there and a crib there. But I'm going to pull that one right down to about there, which was a stopping point on that down candle, the opening point, sorry, on that down candle there. At the bottom, we're going to keep those the same. Let's move on to the S&P, the ES. We were just below the median, so again we've closed up above the median line there. We pushed into that resistance zone, though not as far. Where are we going to see a stopping point? Well, this I'm going to again put up to that high crib there for the same logic on the other one. This one I'm going to move just to there, which aligns with those cribs there and just about that point there. What we did see on the S&P yesterday at one point, and you can just about see it from here, but remember this is a mini, sorry, not the composite index. We did see we just hit a record high during the session yesterday. Downside, that's pretty tight, but that seems good for today. I'm going to actually just pull that downside down to that crib there. Moving on to our YM. YM again up. It was already above the median line, if you remember, but look here, this is interesting. This looks like it's sort of closing in now. So we had a bit of a spurt yesterday, didn't we, across all the markets, but it could be that they're just going to start sort of moving sideways, you know, day up, day down, day up, day down. This is what these internal Bombi lines, if you like, the median and then the upper minor and lower minor, seem to be telling us. We're a long way from the major lines at the moment. In terms of the levels, I'm going to leave that one where it is. That one I'm just going to push. No, I'm going to leave that one where it is as well, because that's close to, you see you've got sort of three cribs over there you're going to have to push through. This one looks like that's going to be a stopping point, and this one I'm just going to pull up to there. Remember, these lines, the lines you put in your hourly chart, when you see those on your hourly chart, you're looking at then at both an hourly time frame and the significant levels on the daily time frame. That will really help your trading on the trading time frame that you use, be that 5 minutes, 10 minutes, 3 minutes, whatever you use. Now on to my friend the Russell. Now the Russell, we talked about it yesterday. Red was what we were saying yesterday. We've still got red. Yes, we did get the same kick up that we got across the rest of the markets, but critically, it's still below the median line, and these are angled down. But as I said yesterday as well, we've not got a huge amount of space below us here because we have a very, very strong line here, which is our blended super major. As I say, these are the larger players in the markets, and this is where they're saying we're going to come in and buy at this point. We don't think the price should be any lower than that. In terms of the levels look pretty good on there. Today could probably even bring that one down slightly to that crib there. Some really nice trades made yesterday. It wasn't an easy day trading yesterday, certainly not if you traded before the Fed announcement, but go on to the trading section of our website, you'll see some of the member trades from yesterday. They were really nice. You just got to be patient in markets like this, and if you were patient yesterday and you waited for the Fed meeting and then you waited for a couple of hours after the Fed meeting, you saw there were some really nice runs, really clear targets with nice lines which weren't overlapping. Those are your really high probability trades. Those are the ones you want to take. Those are the ones where you can maximize your profit because you can be more comfortable putting on a couple of contracts, for example. So next thing you're going to see on the video will be the daily levels that we've just been through. You'll see the numbers, get them on your charts. Any questions at all, just drop me a note, peter@intelligex.com.